Good afternoon, ladies and gentlemen. My name is Clemens Hillmer. I'm a partner at the international law firm Clyde & Co., and I am based in Hamburg. Raising capital in China, strategies and options for international ship owners. I think a very interesting topic we are going to be discussing today. And I have the honor to introduce you to my esteemed panelists. Here from the left, we have Mr. Michalis Livanos from DryDel Shipping. Hello. We have Mr. Gautam Khurana, CFO at Precious Shipping Public Company Limited. Good morning. We have Mr. Stavros Gyftakis, CFO at Singhai Maritime Holding Corporation, as well as CFO at United Maritime Corporation. Hello, Stavros. And last but not least, we have Hatim Battiwala, Finance Manager at SPM Shipping. Hello. Gentlemen, maybe as Mark O'Neill already mentioned this morning, we do see a tsunami of new developments. We see US port fees for Chinese vessels. We see countermeasures from the Chinese government. We see that the IMO has postponed the discussions about the net zero framework for 1 year. So many new challenges we are facing at the moment. And gentlemen, what I would like to discuss with you today, and maybe as a starting point, and because we are going to speak about raising capital in China, I would like to ask you, what is your current exposure here when it comes to Chinese financing? Michalis.
Thank you, Clemens. Very nice being here with you. Good morning, everyone. It is, as you said, very challenging times. This is a good place to raise capital and to do financings. After quite so many years, Chinese have made it in that sector as well, not just shipbuilding. They are very successful. So far, DryDel Shipping now. DryDel Shipping is predominantly owner of Japanese-built vessels, and we have a lot of sale and lease transactions with Japanese owners. So we haven't done yet any deal with Chinese lessors. However, we know that is the right place. We see the opportunity, we see the momentum, despite the fact that these days there is some crisis in that sector. But I'm sure that shipping people will react in the right manner, and the $100+ million, billion that Chinese lessors provide to ship owners worldwide will remain intact, and it will be going forward a steady source for borrowing money and raising capital.
Fully understood. Thank you.
Yeah, so for us, currently our borrowing is in the form of senior debt from here, from the region. We were actually looking to close a leasing transaction in the second quarter of this year, but unfortunately because of USTR 301, that has got delayed. But clearly the expertise for ship finance is certainly over here. This is a really huge pool of capital, competitively priced capital. We think that, I think that USTR 301, I think it is likely to fall away. So probably quite soon. Whereas I think the pool of capital will be, I think, available to us and to other international ship owners quite soon again.
And in terms of percentage, how much is in?
It's right now it's a small percentage, but it's something we're looking to grow, as I say. So.
Okay. Stavros.
Good afternoon also from my side. It's great to be here in this amazing country, in this fantastic city that breathes and lives shipping, and you can only compare the energy of Shanghai with that of Athens and Piraeus. So very, very good to be here. Ni hao to everyone. For us, Chinese leasing has been an integral and very important part of our financial strategy. We have around 25% of our fleet financed through Chinese leasing, and then there's another 25% which is financed through Japanese sale and leaseback transactions, and the rest is basically financed by Western and Greek banks through traditional old boring mortgage-backed lending. Being a pure-play Capesize owner and operator, we are not that much affected by USTR. Capesizes rarely call in the US. Maybe we have had one call over the last 6-7 months to lift coal cargo out of Baltimore. So we have not been nervous with USTR and that developments, and we continue to be very supportive of the product. We think that especially now in the way that asset prices are developing, being able to raise financing at a decent loan-to-value and on the back of longer loan profiles, it's basically what makes all the difference in terms of break-evens, in terms of cash flow going forward.
Thank you. Hatim?
Thank you, Clemens, for the question, and thank you, Capital Link, for such a wonderful event. Regarding your question, we at SPM Shipping are quite relatively young ship owners. We started in 23. We have a fleet of 30 vessels ranging from VLCCs to offshore assets. So for us, Chinese leasing is very important for us. Reason being, any marginal difference in the base points over the margin is a huge amount for us. So we constantly look for competitive options, and Chinese leasing is quite competitive in terms of the rates. Currently, we have not diversified our fleet in terms of Chinese financing. Out of the 30 we own, we have 3 that are financed by Chinese leasing houses, but that is very less, and we want to ensure that we reach to the maximum level we can in terms of Chinese leasing.
Oh, very interesting. Now with Chinese financing having been instrumental for the globalization and the development of the ship finance industry, now we do see this US port fees. We have seen Chinese countermeasures. How does it affect your business, your daily business, Hatim?
It does not affect us much because, as I stated, we are a relatively young ship owner. So our fleets are more or less not young. We are relatively in the ranges of 15-year-old fleet. But recently we took 2 VLCCs which were supposed to make some US port calls, and for that reason we thought of staying out of the Chinese leasing on those. But now with the developments that are coming through, we are exploring options to get them on the Chinese leasing, because at the end of the day, as I said, this is one of the largest shipping and leasing player in the world. So we need to ensure that we cannot overlook this, and we need to maximize the potential that we can have from the Chinese leasing.
Yeah. Is anybody affected by these measures?
No, it has not affected us because, as I stated, the leasing, the borrowings that we have on the vessels are not making any port calls to US, so that has not created a much impact for us. But we are constantly looking for ways to mitigate that risk and to ensure that we increase the Chinese leasing.
Yeah. And Stavros, Gautam, Michalis?
Look, for us it's the same. I mean, we rarely call the US, so we are not affected. But I mean, looking at the greater picture, our industry over the last, 10 years, we have been operating under pandemics, we have been operating under trade wars, under tariffs. And in all this environment, we have been called to install scrubber on the ships, to install ballast water treatment systems on the ships. So basically, shipping is always caught in the middle of regulations, of tensions, whereas it's an industry that is basically transporting 90% of goods. Instead of governments, instead of supernatural bodies making the business more easy for us and smoother for us. It's making the business on a day-to-day basis more complicated. Look at USTR, look at the Chinese port fees that were imposed recently. Instead of ship owners focusing on the smooth running of the ships, on the safety of crews, on the safe operations, we are basically becoming news junkies. We're waking up in the morning and we're looking at Bloomberg to see what is the new regulation that will be imposed on us and how this will affect our day-to-day life, the life of our crews, the life in the office. So basically, even though we're not directly affected as a company that is not calling US, the whole operating environment is changing in a way that is making our business much more complicated.
Yeah, so for us also, there's no impact at all because all our ships are under 80,000 deadweight. And I completely echo Stavros' points. I think we are distracted. These are all distractions which, again, I hope will go away once there's a resolution in respect of the trade war. So these are all temporary factors that we have to ride through. These disruptions are not necessarily bad for us, for shipping, because more disruptions increases ton-mile demand, and so that's part of the reason why you're seeing increased freight rates over the last few months.
Okay.
Same like the other speakers, we are somehow unaffected by all that. Luckily, or because of our strategy, we have Japanese predominantly ships, so we can trade as a private company, Greek owners in the United States without paying any dues, and in China, again the same. But recently, a year ago, I was again here in this room attending same more or less panel. Recently, we have invested in Capes. So that's a market, for example, that, as Stavros said, that you have very rarely calls in the United States. So this is unaffected. Actually, shipping industry, all of us, ship owners, have to map exactly what's going on here, because we have to rationalize all these measures and tariffs, what impact it's going to have on the tonnage. And I'm inclined to say that we'll see a separation of the fleet. Some of the fleet will trade east and some of the fleet will trade west. And people, by reaction, will do the best to protect their interest. Already we have seen it. Some people try to, protect themselves from being characterized pure, more than 25% Americans in terms of ownership. So shipping is a reactive industry, and I believe that everybody will take what it has to be done in order to find a way across and sustain.
Thank you. And you mentioned that you have actually existing Chinese leasing transactions as well as new Chinese leasing transactions which are currently being negotiated. Have these measures now any impact on these existing or new upcoming leasing transactions? How is this being addressed? How are you communicating with your Chinese counterparts on that? Stavros?
Yeah. The evolution that we have seen, especially over the last 5 years on the lessor side, is that basically they have moved away from sort of transactional, asset-focused approach into a more relationship approach. That means that we have a very frequent dialogue. They have invested time in understanding our business model. They have made themselves comfortable with our business model. So despite these disruptions, the ongoing disruptions, the relationships are working very smoothly. The communication is continuing. It's even more frequent now. They're staying close to the clients. They're trying to understand how they can assist the clients to overcome the disruptions. And for us, from our position, I mean, we have invested a lot of time an effort in building these relationships, in expanding our networks in China, be it on the ship financing front, be it on ship operations, be it on ship repairs and maintenance. And we will not, in any circumstance, let this distortion take that away from us. And we feel that it's something which will be short-lived. We feel that this is something that would eventually be resolved. So for the time being, for us, China is business as usual. Nothing has changed.
All right, interesting.
Yeah, similar to us, we have a relationship in China. We are constantly looking for exploring options in China. We had a VLCC term sheet from one of the leasing houses in China. The only reason we could not do was some last-minute issues, but there has always been a positive impact from the Chinese leasing on our portfolio, and we want to ensure that we continue the relationship. The relationship is as usual. We are looking for options to explore further Chinese leasing on us, and because this is one of the largest industry and largest player in the market, you cannot eliminate or you cannot look for alternatives. For us, it's a more you can say USTR has a positive impact for us because now China has untapped funds which can be used for a ship owners like us who do not go to US, and that makes borrowing for us a bit easier and bit cheaper for us. So that in that way USTR has a positive impact for us. So we see that any changes in the regulation that tries to diminish the role of Chinese leasing houses will always have a positive impact on the non-US going ship owners.
Yeah. So you see also as in terms of pricing, yeah, that is also beneficial for you in a way?
Pricing has always been you can say the first most point that encourages you for a Chinese leasing because they are the most competitive leasing house. We borrow from Japan, we borrow from Greece, we borrow from UK, but we have not seen the rates that we get in China from Chinese leasing houses. So they have always tried to remain competitive, and you can say they are the most flexible in terms of understanding the structure and understanding the way we want to get a document done, we want to get the drawdown done. So they have always been positive in all those factors.
Michalis, Gautam, you're obviously fully committed to Chinese leasing and Chinese financing. Have you seen other owners who are now trying to avoid Chinese leasing? I mean, in particular because of title risk maybe, and also the US port fees. Have you seen that?
I think that's a question perhaps for the leasing houses, to be honest. But I can imagine there would be a bit of hesitancy until these USTR 301 is reversed. But that said, I mean, I agree with Hatim that I think if you have ships that are not going to be calling US ports, it would make a lot of sense to tap capital from here. Okay. And so I think there would be demand for sure.
What we know is we know from the press. I mean, we know that a Greek owner, VLCC owner, repaid the facility of a few tankers with the Chinese lessor. This is what we read. This deal, we understand that it was done a couple of years ago. The project was in the money, to my understanding. I don't know the details, but it makes sense for them to refinance with a Greek bank, I understand. However, I don't believe that the banks that left active, Greeks or international, could absorb the volume that Shanghai produces and services. So I see that people will be creative in sense, use sensibly the source of financing here, and of course, to me the recipe is nobody in the shipping puts all its products in one basket. Yeah. I mean, people are diversified. Yeah. They use that tool, the leasing. They use plain vanilla financing, as DryDel we do. We have plain vanilla financing. We have Greek banks, we have international banks. So I believe ship owners across the globe are very mature, and they haven't put all their baskets under Chinese deals. And that gives them some protection, at least.
Yeah, I must say, of course, the US port fees and other title issues are also linked with the fact that in a leasing structure, we have Chinese ownership. Of course, that could be avoided if this is being converted into debt, yeah, so loan facilities, yeah, which we possibly may see more in the future. Yeah. Have you also spoken with your Chinese financiers about that?
Yes, we have explored options, and we were in talks with them because, see, as per the current situation, a leasing house in China cannot do a mortgage structure. It has to go for an SLB structure. But now, you know, China is quite adaptable and it will be more flexible. So you can see that these Chinese leasing houses will be allowed to do a mortgage-backed structure.
Yeah.
So when this structure comes in, again, there will be, you know, the situation in US, they will again come with a new rule that any financed by Chinese vessel cannot come to US. So that is an ever-changing situation, and that is something that will happen every day. As Stavros stated, we have to read Bloomberg every morning to ensure that whatever we are doing is doing correct. But that is another thing. But these leasing houses are quite flexible, and they will try to use any other alternative methods that they can adopt to ensure that the financing flows. And it will be beneficial for them also, because they can also go to a neutral country. They can establish his office in a neutral countries which have good tariff rules with US and with other economies. So that will also increase their base around the world.
Thank you.
I agree. I mean, the ability that the Chinese lessors have shown in adapting in changing market conditions and in changing regulations is very important here. There are structures that are contemplated to overcome the issues that came up through this regulation. It's very important to highlight, I mean, the structural element of this. You have, your vessel might be considered that is under Chinese ownership through the sale and leaseback. At the same time, using US GAAP as a public company, we have the vessel on our balance sheet and are depreciating it. How strange is that? I mean, how can you reason with that?
You're fully right. Doing Chinese leasing, we also saw partly time charterers, asking in time charter parties to include a clause or an undertaking that the vessel is not subject to Chinese leasing or financing. Do you encounter something like that? Have you seen something like that?
Yes,
time
right.
charterers are asking for that?
So I think for any ship that goes on a period charter, that is pretty standard today.
Okay, all right.
This is the case. The issue is that, this thing has to be rectified. What I want to add up on the comment from Stavros is people here are very professional, good bankers, and I'm sure that they will find Stavros the way to sort the mess out and maintain momentum in doing business with you and potentially with us or with all ship owners. That's the idea.
Agree.
So with all this, let's call it a mess, do you think this is more a short-term experience now, and maybe in 3 to 6 months we are back to business as usual, or do you think that this will in a way continue? Any views on that?
So I think the counter regulations that China has imposed have quite a huge impact on many of the large American operators. China, after all, accounts for 31% of ton-mile demand for shipping. US accounts for 12%. So this market is far more important if you're a player, in the global shipping industry. So I think that for that reason alone, I expect that this USTR 301 will go away. Commercial pressures will drive it to go away.
I agree. Up until now, the conversation was about tariffs. USTR was not even in the spotlight, but following the Chinese port fees, it very much came in the spotlight. So I think that the discussions between the two countries will focus equally on tariffs and on port fees, and I think that it will be resolved as a package, so to say. So I'm very confident it's to the best interest of both countries to resolve it quickly and to resolve it smoothly so that we can continue conducting business the way we were used to. At the end of the day, I mean, the biggest beneficiaries of the resolution of this issue will be the end users, both in China and in the US.
Hatim?
We don't think that this will create a much impact, and we are certain that there might be a reciprocal measures that will be coming, that will be coming. So if there is one that comes from US, then there will be another that will come from China. But China is a manufacturing economy, and you cannot eliminate that economy. So at any point of time, the majority stake will always remain here. So we need to ensure that we run in collaboration, not on confrontation. We try to use the best methods that is beneficial for both of the countries and both of the economies. And it ultimately, as Stavros said, ultimately the end burden will go to the users, and certainly two decision makers will see this and will ensure that everything happens in a right spot.
Okay.
We are in the middle of trade conflict. I'm not persuaded that this is the peak. It may escalate more. I'm optimistic, though, as the rest of the panelists, that things will pan along good, well at the very end of the day for the end users. But this distortion is not relatively bad for our market. I mean, for us on the dry side, we have seen better rates on the Ultramaxes, at least, over the past few days, and after the Chinese government imposed the tariffs. So, in all honesty, this is negative and positive news at the same time.
Yeah, good, interesting. We also spoke about diversification. Yeah, so then looking possibly also at other countries for capital, in particular in Europe, in Germany. We also see a quite strong appetite in Japan, for example, JOLCOs, sale and leaseback transactions, which are also to a large extent based on leasing structures. How do you see other sources of financings, Japan, any experiences with that, and also in comparison to China? What are then, when it comes to in a comparison between JOLCOs, for example, and on the one hand, and Chinese leasing on the other hand, do you see any differences, advantages, disadvantages?
Japanese are very, very active governments these days, and actually they try to take a share from the Chinese market. One other market that has come across to us is the Norwegian market, the bond market in particular. We have been receiving several calls every week from almost everyone in the market that the rates are very competitive, historically low. There is appetite. The investors there are not only Norwegians but international. They are willing to give the money at good terms, flexible terms. We have seen public and non-public companies raising money there. The understanding is that this is not debt, this is not equity, it's quasi-equity, something in the middle, but is relatively very fairly priced, which I have to be honest attracts the attention of private owners as well, to the extent that you can justify that on your balance sheet. Maybe it's a good timing to borrow that money. You have a lot of flexibility. You are not liable to reports like United States of America, very strict rules in terms of reporting. And this is also a preamble for a private company, for example, like DryDel, to go and tap money from the capital markets. So Norway is one thing, Japan and Japanese lessors the other, and secondly and thirdly, I believe lenders. I believe that the strong lenders, despite there are few, because many very well-known banks have now gone for us, like RBS and others, which we all but I believe that other banks will become stronger and will get the opportunity to get more deals. Pricing, to me, is not an issue. Pricing has to do with the risk of the client. So if the client is good, I believe that there's no increase in pricing. The price is not going to increase because they take deals from somebody else. This is my understanding. I mean, at least we at DryDel, we see pricing decreasing rather than increasing, despite that.
That is also what we see in general, a very highly competitive market on the financier side. Do you have any experiences with new financiers in Japan or?
I generally think that every territory and every leasing solution has their own pros and cons. In case of a Japanese, we have Japanese leasing on our books, but in them they have a certain restriction on the type of assets they do, on the age of the assets they do. So that is that in Greece they understand more of the offshore assets, so it becomes easier for in borrowing offshore assets over there. So there are pros and cons for every leasing. So in China now they have started because of the USTR and because of the excess funds they have also started looking to explore financing for the offshore assets also. So all these territories are developing, all these regions are developing, and they are changing according to their requirements of the developing scenarios over the world. So we see that you cannot just place your cards in one basket, you cannot just rely on one territory, but you cannot also eliminate one territory just because there is some regulation risk that might arise. So you should see it in a harmonious way.
I agree. I mean, given the challenges of the geopolitical front, being diversified in terms of your sources of capital is very important because depending on the developments, I mean, you can pivot from one to the other. Comparing Japanese leasing to Chinese leasing, I would say that Japanese leasing is more a special purpose kind of leasing. I mean, you do that. You don't do that necessarily for the terms or for the pricing. You do that also for the relationship angle in establishing a footprint in that country. I mean, it needs a lot of effort. You have many barriers to overcome. So starting with a transaction on the financing side with a friendly owner that you have potentially purchased a ship from and he wants to defer the tax liability, maybe it's not the most competitive in terms of pricing, but they can offer long profiles. But you cannot compare that with the corporate lending that you can do in China. You cannot go to Japan and say, I want to finance 10 new buildings and 5 second-hand ships in one go. That you will never do, unless if you have access to Japanese banks, which is a different ballgame. So China gives you this ability, actually, to do large-scale transactions. And compared to Western banks, I would say, again, it depends on the business model of the company and on the sector where you operate. For example, in Seanergy, we are focusing on mid-aged Cape-sized vessels. We think that the outlook for the sector is stable, positive, I would say, with considerable upside going forward. So basically, the main concern is not break-evens right now. We think that the market for the next 4 to 5 years will perform at around 20,000 or so. So basically, if you want to address the financing of a 15-year-old or a 12-year-old, a 13-year-old ship, 50% financing to a Western bank, then probably you will get a profile of 5 years over a loan of, I don't know, around 15 million. So basically, you have to amortize 3 million every year. That results in a break-even of around 18,000. If you take the same ship to China, the same percentage of financing, you get to double your loan profile. So basically, your break-even goes down to around 14,000. So, I mean, there's no magic recipe. Probably you do one here, one there, and then your average profile is still very reasonable. Yeah. But you have to have the ability to diversify and then pivot between financing sources.
Yeah, so for us also, we very much follow a diversification strategy. So we have lenders from Germany, from France, from Singapore, from Japan, and from Thailand, of course. And we also tap the bond market. And I think there's no one size fits all. So Japanese financing tends to be more inflexible, but it is cheaper, but compared to, let's say, a plain vanilla loan. So I think having a diversification strategy as far as financing is concerned is automatically de-risks the balance sheet to quite an extent. So.
Thank you very much. Not really linked to our topic, raising capital in China, but I think I'm very much interested in your answers or your views on that. Now, seeing that IMO has decided to postpone the discussions about the net zero framework for 1 more year, how do you see that? And also with the comment of Mr. Trump that the US customer is not going to pay for that. Are you now pulling out of green shipping?
We are not pulling out of green shipping. We have invested almost, at least as private owners, almost $1 billion in modern ships. Yeah. And as already has been said in this panel since the early morning, the new ships, the Tier 3 engines, new designs, they produce much less emissions because they burn much less fuel. So we use scrubbers, we use technology, we use aeroline design, we buy the top spec ships, and we contribute to a better planet. Yeah. This is not change of plans. However, the postponement in any, if I may say, of any decision taken, I think is wise, because Europe, I think, was running too fast, and EU ETAs and all this new regulation has come to a much pain in the management of everybody. I mean, we have to hire more people to look after what's going on and how to allocate the EU ETAs. I mean, now chartering, they do accountants as well, and vice versa. So it has become too much for a ship owner to deal with all that and absorb it. And some people, of course, avoid trading in Europe because of that. However, by having new ships, we can do that. And I believe that by using biofuels, by reducing the speed, and all other measures that already been said, I believe that shipping will make its contribution to a better environment going forward.
Maybe we are coming slowly to an end, but one comment on that, because it was very, very difficult to implement EU ETS and Fuel EU in the European Union. It is now also very interesting to see what the US will do if Mr. Trump is saying that the US customers are not going to pay for that. And that was meant to relate to the IMO regulation. But the question is whether this is also to be extended to EU ETS and Fuel EU. Yeah? Does it mean that US stakeholders will not pay for EU ETS and Fuel EU in the future? And then, of course, the participants of these schemes will want to have equal treatment, yeah, and this will definitely put some pressure on these regimes within the European Union. Now, one very last statement, very short one. How should international owners position themselves here in China to do business in the future in China? Hatim.
See, at the end of the day, everything boils down to the profitability. It all depends on how profitable we are running. So any changes in the regulation will always have to be conversed with what is the change, what is the cost of that compliance, and what is the income that we are generating on considering that compliance. So everything will have to be depend on that. So in case if the compliance cost is not that heavy, then we will try to mitigate by doing some other method. So everything boils down to the profitability. So as stated earlier also, China will remain an important part of the leasing solutions, not for us, but I see majority of the ship owners because you cannot eliminate this economy.
Stavros?
I think, the answer is obvious. We should stay close to the country, close to the developments in the country, close to the local players. I think the future of shipping is very much an integral part of this country. China is such an important source of capital. It's such an important place for our cargoes. The local networks that have been developed here, including ship operations, support networks, new building facilities, repair facilities, local banks providing refund guarantees. Basically, here, this country is the future for our business. So we should remain close to the country. We should continue building relationships. And profit is one thing, and profitability will eventually come, but this should be the ultimate aim. In the meantime, you have to forge relationships that will be there to support your business in the future, irrespective of whether the market will be profitable or loss-making.
Stavros, thank you very much. I think we all share this view. Thank you very much to the panelists and to Capital Link also for organizing this event. Thank you very much.